Hello, my name is Liberty Model number W84it.
Okay. This is wait for it. And so you're getting into options, right? Probably because I told you to. But here's why. In options, you don't have to worry about your emotions getting involved. The reason why you're not passing your evals and you're not getting paid, um, you know, with your PAs and stuff, and you're blowing them up is because you're emotional, right? And so your emotions are getting involved, and I've got something for that. I'm going to be working towards helping you with that. But until then, go ahead and pay yourself to be in here, right? Pay yourself to be trading. Get some easy wins. Make yourself feel good about it because you've been beating yourself up probably for a while now, and you don't need that kind of stress. So let's get into options and let me show you how you can make money. Now, there's some things that you need to know about options, right? We're gonna go ahead. We're gonna do it on Robinhood. Yeah, there's people that say like, "Oh, Robin's out to get your money." There's still, everybody in trading's out to get your money. That's the point. Okay, don't be stupid. So um, throw $100 into in a Robinhood account, right? Start off small. It doesn't matter. Just throw $100 in there, and I'll show you how you make money on it. Okay? It's stupid easy. And you're like, well, how come you stopped? Well, the government likes to theta crush the market all at one time, and so I was overextended every time I was in it, and I'd lose thousands of dollars off of that. It'd make me so mad that I just get out of the market, right? But now that I do futures, I don't need to be so heavily vested into options. I can just kind of play a couple option plays, put some money in my pocket, and be done with it, right? And that's the way you should do it, because that way, if you theta crush it, you're not losing thousands. You're only losing what you have in there. Now, you shouldn't be in it that heavy. Okay. Um, all right. Some things that you need to know. If you go into Robinhood right now, your money can be liquid. You can actually just start using it instantly right now. So now's a good time to go ahead and be in it. And then when you get in there, you come up to the top here and you type in the stock. And so if you're confused like what stocks you want to like you should be trading or whatever, I've got you. So TradingView, you can get a free account there. You don't need to pay for any data or anything like that because I use the daily chart. You don't need anything more than the daily chart. If you want to like, maybe dial in on your entry so you don't, have to deal with the pullback or whatever whatnot, then you can go to a 4 hour after you find your entry on the daily, to find the same entry on the 4 hour. But the same trading strategies, the same triggers, the same things that I'm teaching you in futures, you're going to use over here on a daily chart, which is basically frozen in time. Like it's not moving. There is no anxiety. It's not like driving a Ferrari or on the Autobahn or anything like that. You're literally in a Prius, you know, driving in you know, the the family lane and on cruise control. And it's stupid slow. Like all the stuff I teach you when it's in the moment and you're on the NQ and it's stupid fast. Yeah, it's confusing as right. But when you put it on a daily chart, you look at the same principles, man, it's dumb. It's so dumb. How do people not make money? So I've taken my accounts from 500 to 7,000 to 500 to 4,000 um, in a couple months. So it's all in how you look at it. Now, I'm going to tell you right now, when you look at your trades, and so to find the trades, I'm going to be calling them, I'm going to talk about them in session. So that's one way. You can always go to my Trading View account, which is I can't wait for it. And you can look at my ideas. You just type in my name and it pulls up you say, look at ideas on my profile there. And you can sit these and hit the play button. You can see how far along it's into the trade, whether it's going to make money or not, um, and decide whether you want to be in it. I describe it underneath there in full, and and it's it. And so use it as a means of making some extra cash there for yourself. Now I go back to this other right here. When you're looking at this, like I just opened this account, it doesn't matter like that. It doesn't. I've got other options. It's don't none of that matters. So, but when you look at this, none of this stuff matters either. But I'm showing it to you because you should know it's there. It comes like this. When you type in COP, which is Philip 66, basically your gas stations, uh, pulls up like this. You click that, it loads. You're going to find this green button down here, and that's going to take you where the in the money is, right? And in the money means like where price is right now. And so you would hit this trade options like right here. Analyst holdings telling you what's the percentage. Like, and I don't really look at other people's stuff, right? I don't care what other people think the market's going to do because they're dumb. Sorry. I never have, never will, don't care. I'm going to make a trade based on what I see in the market, and that's how I've been successful. So now you'll get this green little split here in the price, and that's telling you where price is right now, and it tells you right there on it, 108.34. So it's in between the 109, 108 option call right there. If it's at the bottom of the page, you just click in it, and it moves the page up to where it shows you where the price is, and you're straddling it. Now your this little box right here is going to give you a place to change how long you're in the trade for. And so if you think it's just going to be a quick little move down because it failed, then you probably don't need something more than 10 days, right? So in this situation, I picked a 7-day one because I think it's just going to blip down real quick and it's going to consolidate down there, but it's going to get down there real quick. And I could be wrong. You know, that's where buying extra time might make you right. And so I probably would strongly suggest that you only do option plays when you're first starting out on something that's 15, 17 preferably to about 30 days. All right. 28 is the lowest amount that I would do. And I'm sorry, if you're looking 30 days, like 28 is about where you want to be. So 20, it's like this. And then the price over here to the right is what you're paying for your option play, right? And so if I'm looking at the strike price, I'm looking at in the money means that if I'm looking to go long, that I'm in the money means under the green bar, right? Out of the money means above the green bar. So it's obviously cheaper out of the money because I'm standing in more of a risk because I'm saying that if I want to do it at 112, that I expect the price to go up $4 before I even start to make money, right? And then I expect it to go higher than that. And so look at it, it's 26 cents versus in the money at $1.81. So big difference there, right? So that's something that you have to kind of work out and figure out. But in the beginning, I strongly suggest again that you only look at your option plays that are like right here, one above, one under, you know? Sometimes if you're like really close to this one, like you're like really close to this one and you expect it to go down, maybe this guy right here, you know, if you're strong about it dumping, right? And it's going to go like farther than like $5, right? Or something like that. Like it's a $10, like you think it's going to drop $10, then yeah, maybe you look at this guy right here, you know? But I would strongly suggest staying right in this area right here. Now, sometimes you get one where the price to be in this one is like double the price to be in it here, right? Well, if I feel pretty strongly that it's going to go up to, 115 or something like that, then I might take two of these at 110 for 70 cents. I pay $1.40 versus $1.81. That's kind of a no-brainer. I make $2 for every $1 it makes going up after this point. I risked an extra dollar. Who cares, right? And again, that's just something that you have to play with and kind of figure out on your own. But if you just focus on these two right here, it's pretty straightforward. All right, now how you make a buy order to go long, right? You buy, remember, buy, always buy, never sell, always buy a call. And I stress that because the difference is staggering. Your loss, the amount that you lose is exponential. Okay. So if I'm trying to go long, I'm buying a call, then let's say I buy this for two of those, right? So I can only click it one time. And it immediately pulls over here and you see this graph. And it says that my max loss is $70. And that's the beauty of options is that the most that you can lose is $70. What I paid for it. Now here's how it works. Look, that's only if you watch it bleed and end and don't get out of it. That is the only time you lose the full $70. Unless they absolutely just theta crush it and it just buries it. Then it's worthless instantly. Right? And that happens like once every 3 months or so. So you gotta be careful. But your max loss is only $70, but your potential to the upside is unlimited. Okay, so remember that. Buy on a standard option call means unlimited profit, and I'm only losing what I'm putting in to get into it. Okay. Now, watch what happens when I hit sell. Let's do it for the same one. My max profit if I sell this is $52. Max profit. The most I can make, period, is $52. But what I stand to lose is unlimited. And you're like, holy, why would I do that? Because you sell what you buy to get out of it, right? So you never sell up front when you're doing a standard option call. You only do buys. I buy a put. I buy a call, right? Or you're going to get this where it says unlimited on the max loss, and that's a good way to murder your account and never be able to do options again or ever want to. So you buy, oops, cancel this one, buy a call, and your unlimited is going to be on the profit side. Your loss is going to be what you stand to risk, what you're paying for it. You buy a put, right? That's saying that you think it's going to go down. A put means it's going to short, right? And you're like, you don't need to understand why that works, right? I don't understand why people get so confused with that. Who cares? All right. If you follow how I trade and I make trade calls, I say that it's going to break out. And if it fails to break out and reach that, if it fails to close above that last high that it had, it absolutely will dump. It'll go down, right? Because it's a fail, right? So that's how you know it's going to go down. That's why you would do a put, right? You don't need to know any other, you don't need to know why that works. You make money on the way it's going down because you believe it's going to go short and it's higher than where it should be right now. That's it. It's overpriced. It's going to make money going down because it's going to be paying me for getting in at the high price as it drops down to the low price, right? Okay, so you buy a put. I'm buying the opportunity to open my trade to short it from a high price that I believe is going to drop down to a low price. Okay. And so then again, your max profit's unlimited. Your max loss is only what you stand to risk from it, right? So if I was to get in here, I only stand to lose $178, but I still have the other option play in there too. So I take that off, boom. Now my max loss is 178. It matches that. That's how you know you did right. Okay. Buy a put, buy a call. Now, if I'm in the trade, let's say I'm in it. Let me get rid of this. All right. Let's say I picked a healthy trade. I'm like 20 days till it's to expire, right? All right. And then I'm looking at it and I'll say I got in on this option call because I believe it's going to go to 120. Okay. Well, as long as the price, I'm buying a put right here. So I'm wrong. I'm in it wrong right now. My max profit is $10,000. My max loss is $252. And so I got in it backwards here. So let me show you what I did, and so you'll understand. I clicked this one. It's above the. It's actually in the money because I'm buying a put, which means I believe it's going short. It's shorting, and so as long as the price goes down, I make money. But if the price goes up, because I just did it backwards, if price goes up, as price is going up, I'm losing money here, right? But I'm only standing to lose the $252. And so how this pricing works is that you just take the decimal, move it over two. So if it says uh, if it says 14, that means I'm only paying $14 for it. If it says 75, then I'm only paying $75 for it. If it says 252, I'm paying $252 for it. And so you just have to pay attention to that part of it. And so obviously I'm in it backwards here. My max profit's 10,000 if it goes down. My max loss is 25, but my price is going in the wrong direction. I'm trying to buy a call and I'm buying a put, and so as the green side is going to the left, which means its price goes down, I make money. So I'm in it wrong. So I just got to hit this X here to get rid of that. and then I want to buy in the money or close to it, right? So I'll probably buy this 205 because it's only 70 cents away from that. And then I expect it to go to 120, right? So then every time it goes up a dollar, it should make about it's every option call is worth 100 shares. And so if it goes up a dollar, then I'm getting a dollar. I'm getting a dollar for every share, so it's $100 per share. Now, that's only true after it reaches a certain point, right? And so there's a lot of things that play into factor. I don't look at any of this shit over here. Just excuse me, I don't look at any of this stuff. All right. But delta is the percentage of chance that you have to win, right? So 48% chance to win. Um, Gamma, I believe, is how much you're making per dollar right now, if I'm not wrong. And don't quote me on that. Theta is how much off um, you're losing. It's what you're losing every dollar. And so as theta goes up, as it gets closer to the end of of your your option call, right? The closer it gets to the end of your option call, the theta increases and it starts eating up the profit that you're going to make. And right now the profit's really small here as it goes up because you just haven't reached it hasn't gotten into maturity yet, right? You're not even there yet. You're at it's at 108. So you're not making any money right here, but if it does get up to 109, then you made 7 cents, whatever. You know, but once it passes that, then it starts getting higher, like 50, 60, 70, 80, a dollar per dollar that it goes up, right? And so that's why buying enough time is kind of important. You want to make sure you have enough time, but you don't want to have so much time that, anything can happen in the market and you lose all your money, right? So here's how you get out of it, right? If 5 days into this, right, I've got 20 days here. I'm spent $205 to be in this option call, right? If in 5 days this thing goes up to like, I mean, it can go to, let's say it goes to 112, right? That's $4 difference from where it's at right now. Well, I probably made like 250 bucks, 300 bucks on that, right? And it'll tell you over here wherever you made it. So here, it actually tells you right here. If this goes to 112, right there, it means I made 100 bucks. It tells you right there in the corner. So if it goes up to 112 and I want to get out of this, I made 100 bucks and I just want to go ahead and cap my profits, whatever. I just click on my link on my homepage here. I just click on the link of the option call that I have. Boom, it takes me to the thing. Close out trade. I close it. I pick the price I want to close that out at, which is closest to whatever price is trading at. Obviously in their favor. Boom, I hit close, and it tells you how much money you're making right there. It tells you. It looks just like that right there. It'll say like how much money you're making. And then I close out the trade. And so when I'm closing it out, what I'm doing is I'm selling a call option, right, to close out of it. If I'm in a put, then I'm selling a put because I have one to sell because I bought one, right? I bought a put and then now I want to get rid of it. I'm selling the put, right? So I bought tickets to the football game. I'm selling tickets to the football game, right? Bought tickets to the football game, selling tickets to the football game. Same thing. All right. And that's how you close out your trade. Now, 5 days into it, of course, I've got an option call for another 15 days, but I'm only 5 days into it. If I'm up 100 bucks and I want to take my profit, I just close the trade out and boom, I take my money, I walk away. Or let's say 5 days into it, I'm up $100, and then 7 days into it, it starts pulling back on me, and I'm losing my $100, and now I'm like break even. Well, I can get out of my trade right then, take my break even, and just be done with it and find another trade, or I can wait it out and watch it, see if it goes back up again, which it should. But maybe it doesn't, or if I take a loss, let's say it falls back to like 105, right? Well, if it goes to 105, look at my chart. I take my chart and move over here to 105. And even at 105, I'm losing 100% of my money, right? And so you absolutely don't want it to go that low because you're going to lose 100% of your money. Now, you lose 100% of your money. It tells you right here. If it goes to 109, I'm losing. What? Where am I getting in at? 109. So if it falls back, Yeah, if it falls back to 109, then I lose 100% of my money or whatever. If it falls below 109, I guess you can say. Because I'm buying it up here. You're never in money, that's why. You're instantly at a loss when you're buying it up above. So if I buy it more in the money, right? And that's why I say I strongly recommend buying it closer. I'm glad I saw that. If you buy it closer to in the money, so let's say I buy it here, right? Well, it has to go back to 108.34, 108 for me to lose 100% of my money from here. And so if I buy it like at 106, then it's got to go back to 106 before I lose 100% of my money. And so that's when it like you see like it goes up a little bit and it starts to come back or whatever. If if it as long as you get out of it before it goes past where you got in at, then you get to save some of your money. Um, and there's other factors involved, or whatever, whatnot that kind of move it up and down. But you'll get a gauge. You'll be able to see it, right? You'll know when to get out and everything. But a lot of times, and I don't really ever use this here. I'll tell you, like 80% of the time, if I get into a trade and it's not looking right or whatnot, I can just close out my trade and take half my money back out, or more, depending on how long I let it go, right? But if I catch it early and I'm like, oh, this is not going the way I want, I get out of it. I take like about 50% of my money back, and I go and invest it somewhere else, um, and I move on. So that's pretty much everything right there. Timing, how much time you have in the trade is important. Buy a call, buy a put to get out of it. You sell it to get out of it. Um, and just make sure you pick close to in the money, right? If it's a put, it's red, I think, or maybe not. But it takes you down here. It's still under this green thing, like wherever above it is in the money is above it, right here, and you can tell because the prices are less or more expensive as you go up because you're in the money is more expensive, out of the money is less. Um, and that's it. I mean, it's not rocket science, and hopefully that helps you get started doing options. Let me know if you got any questions, and please put in comments below. And happy trading, and I'll see you on the next one.
Hello, my name is Liberty Model number W84it.